Hello everybody, it's Nick here from the Spartan Trader Academy and welcome to our Spartan Trader Academy basic Renko Bar workshop. I had some issues when I first started the recording, so I'm doing it right now again here for you. This is the content. First of all, Renko Bar basics for MT4 and how to use the Spartan Renko EA. Second, how to set up your MT4 Renko charts on your screen. Number 3, using different Renko Bar settings for day traders and scalpers. This is new and very powerful. Point 4, one great way to look for setups as a day trader or scalper and how to manage your trading positions. Entries, exits, trailing stops, money management, everything is in there, okay? And then the basics on when not to trade Renko bars, because people think, okay, Renko bars are filtering out the noise, which that's what they do, but there's also a time when the price does not move at all. Remember, Renko bars are based on volatility, so there are times where you shouldn't trade at all, and that is something you have to identify very early. I'll teach you this. And number 6, all the details about the upcoming 3 days Renko Bar workshop and how to use the new Spartan Academy indicators to avoid sitting in front of your screen all day long. So yes, we created some indicators and EAs that will help you trading, will help you to make sure not sitting in front of the PC all day long and overtrade. Remember, if you sit too long in front of the PC, you get bad ideas and you usually will do mistakes, and this will not help you with your confidence. So the indicators and EAs alone are worth the money for sure. And but for now, you know what, let's just have fun and start with all this. Great, so let me get rid of that one. And what I have here, let's do point 1 first. Takes a second. Okay, there we go. So let's create, let's fix one of those Renko Bar charts together just to make sure you do it right. Okay, so what's the first thing we do? Remember, we have to choose the pair. A pair that's volatile, a pair that's moving always. Okay, now if we get the pair, if you've chosen your pair, you just click on the 1 minute chart. If I'm too fast, you let me know. Yeah, the 1 minute chart, it's very important, so you can see the price actually moving on your live chart later on, right? 1 minute chart. Then you have to make sure this auto trading is on. Like, it has to be green, not red like now. Okay? Then you go to your navigator and you take your Spartan Renko live charts and drag and drop it into this box. This will ask you how you want to set this up. So we want, let's say, for intraday trading between 4 and 6 candles. So let's do 6. That's the basic setup. You change this to 6. You leave that in the Renko time frame. You have to choose a number that is not up here. So 1, 5, 15, 30, that's not a number you can use because it already exists. So you click on 6. 6 is okay. And that's all. You click on OK down here. And then this will appear. It tells you actually what to do. So what you do now, you go to your file, open offline, and this can take a while depending on, there we go. And then you find your Australian dollar yen M6. There we go. That's how we set it up, right? To 6. You double click it and you get your Renko charts. Okay? Now I don't have much history in that one, it doesn't matter. That's it. Now one more thing, you want to place the Spartan template over it. Does anybody Is anybody here who does not know how the Spartan template looks like? It's an MT4 template. Do you all know how that works? Yes? Okay. That's good. If not, you can set it up manually, right? So template, on trade FX, there we go. Then you have your Heikin Ashi or Heikin Ashi candles over the Renko bars. Now you would probably ask why we need that. I'll explain very, very soon. But for now, that's what it should look like afterwards, okay? Then when you check this, you'll see you have your Australian dollar yen M6 chart, 6 pips per candle. And don't forget, this has nothing to do with time. This is not a time frame. That's not like every 5 minute or every 10 minute or every hour a candle. That has to do with volatility only. So if the price moves up, in this case 6 pips higher than the previous one, then you get a new candle. If not, it will just stay there forever. Okay, is everybody okay with that so far? Basic stuff just to make sure. Okay, so the way you want to set this up, when you first practice, you don't want to choose 200 pairs. Sorry, you understand what I mean, right? You don't want to go hey Rahul, I just explained, right? Remember, Renko bars are not time-based, so on the classic Heikin Ashi chart, you will get a candle every 5 minutes. Renko bars will give you only a candle if the price moves by 6 pips in this case, because we set it up for 6 pips per candle, okay? So about the spikes and everything, the reason I will explain later on again, but I'll tell you quickly. I want to see the spikes is because we want to know how far the price moved up. Even if we didn't get a new let's say candle, we still want to see how far the price actually moved before it did something else. Yeah, it's very important for us. Clear so far? Just give me all a quick yes. Just a quick yes. Okay, wonderful. What else? So let me just do something here. So how do you set this up on your chart, right? You choose maybe 4 or 5 pairs to start with, because it can be a mess here if you have too many pairs running. And you want to use pairs that don't have big spreads, because what I'm going to show you and teach you today is based on, let's say, day trading and scalping, and you don't want to have a spread of, let's say, 5-6 pips. Yeah, it's not good. I'm talking about pairs that have maybe, depending on the broker you use, half a pip, 1 pip, 2 pips, maybe 3 or 4 maximum. Okay? Yeah, if it sometimes, remember, we have the Heikin Ashi over the Renko bars, so yeah, it could also be that sometimes you get a false candle. Yeah, like when you check back on your charts, it depends on the broker sometimes that you use. So it's some in between, you could find something weird like this, but it doesn't really matter, because when you trade, you're not interested in the history that much. You'll see things happening live anyway, yeah, or you will see the setups live, so don't worry about some weeks in between. Okay, what you want to do is, when you have a chart running like this, look what I have done. It's down here. You will see it down here, right? The bottom of this chart. It's usually the last one on the right side. So you will also see, if you click the second one, you'll have your 1 minute chart running. That's the one where this Renko bar is based on. So you cannot just say, oh, this is really annoying, let's click that away, because when you do that, this will not move anymore. At least on my charts here, right? Makes sense because it's all set up on this one. Okay, guys? So what you want to do is to have this one not so close to your actual chart that you want to trade off. So if you have it right next to this one, take it, just grab it with a left mouse click and just put it somewhere else, yeah, far away on the left side, so it's not bothering you. Everybody okay so far? Yes? No? Okay, great. Aussie yen. There we go, M6. The next one I already prepared is another one on the euro. And again, this is a smaller setting. That's a scalping and day trading setting, M2. And next to it, I have a time frame. Actually, I have a classic chart, a 1 hourly chart with the Spartan template over it. This is not a Renko bar chart. And next to it, I have an M6 chart, again Renko bars, and in combination with another USD CHF chart 4 hourly, which is again a time frame, classic time frame chart. So what I'll do, I have my Renko bar charts on the left side, and if I combine it, I will tell you about that very soon. I have it also in combination with a time frame. So this right now is sitting alone. We'll just delete it. We don't need it anymore. But we need the next one. So you see the Euro US dollar M2 offline chart is a scalping chart on Renko bars, and next to it I have the 1 hourly chart because I want to combine them. And because I want to combine it like this, you can see that I have them next to each other. Okay. It's a funny question we have here. Is your system working? Good question, but yes, it's working. Otherwise, I would really not sit here and try to teach you. Would, I think, be a waste of time for everybody. Yeah, but it's a good question. Now, if you cannot, you know, fix the Renko bar charts, if you cannot make them work on your MT4, then I would suggest you just try a different account, like open another demo account, okay, and try it there. Maybe this one here is, I use one that's called Talinex to practice on. Okay, this is a live account, but you can open demo accounts. I don't mind. You can actually open it anywhere. It should work. Yeah, it should work. If not, you just try another broker. Okay, so what we need, as I said, is your Renko bar settings if you trade in combination with a normal classic time frame. That's something we are going to do. You have it next to it, right? Now, if you have a different setting, this is more day trading, even up to swing trading settings sometimes, or again in combination with a time frame. Just keep that in mind. Are we all okay so far? It's just basic stuff, but you know, sometimes these little things can make the difference in you know, getting it quickly. Great. So in past we started in 2012 and did a lot of Renko bar small like courses and workshops, and we're always trying to improve it, because remember, what happens often is that I see people doing great, and then at the same time, people that started the same, let's say, workshop and course, doing the same thing and don't do great. So I'll always think, and then I say, okay, what could be the reason why some people don't have success and some others really have great success, especially when they're following the money management rules, and especially when they say, or at least think, they understand what's going on, right? And sometimes what I figured out is that often people just don't remember just remember to look at the right places and trade the right times. And this is the most important part when you trade. You can have the nicest looking charts and everything could just look like great, okay? But if you don't really get it, if you don't know when and where to trade and when to avoid, then it's difficult to make long-term profits. And it's not different with Renko bars. Just Renko bars can be very, very powerful when you really understand it, because they're filtering out all that noise. Yeah. And guys, because I see you write a lot here, I cannot read at the same time and explain stuff. So please, if you have to say something or you want to ask something, or you have a request or want to share whatever, let's do it later on, okay? Great. So what we want to do is now really starting with, I would say, the USD CHF M6 setting. It's a day trading setting in combination with a time frame, and I'll choose this pair because it's volatile, and again, as I said, you need to trade, or you need to practice on pairs that really move. Okay, just you have to give me a minute. I have to set something up here so I don't forget to tell you all details. Just give me a second. Okay, are you able again to see my chart and screen? Just a quick yes. Everybody, can you see my chart and screen again? Okay, great. So the first thing, and that's point 3, using different Renko bar settings for day traders and scalpers. I will not give you all the combinations because we don't have time for that. It would be really, really difficult to digest all that in an hour or an hour and a half. So we'll use now one setting, which is M6, and an M6 setting is nothing new. We did that in past. We use that for day trading, and sometimes even combine it with swing trading. That means, like, we look for setups on an M6 chart, and then try sometimes to keep a position much longer by focusing on the main trend of this particular pair. In this case, it's the USD CHF, and you can only do that by combining this with a time frame, and this would be, in this case, the M6 setting in combination. Works great for hourly charts, okay, if you have a trending pair. So that's what you want to write down for now, so you can start practicing on it. Write it down, M6 on a volatile pair, something that really moves, in combination with a 4 hourly chart on the same pair. Do you write it down, everybody? Okay. Okay, wonderful. So now you'd say, hey, I don't want to combine anything. You know, I just want to trade off the Renko bar chart. Can I do it? Yes, you can. I'll give you the whole story. If you want to use only the Renko bars, it's up to you. Okay, so let me explain the basic combination for day traders that could even turn a trade into powerful swing trading, and that is really simple. What you do in the USD CHF, and you don't have to do the classic whole top-down approach. Most of you probably know what I mean, like going through all the high time frames and figuring out what's going on, because what you do here is trying to day trade, and if possible keep a position for longer, part of your trade for longer, right? So for the first thing you want to do is switch to your 4-hourly chart on the pair you've chosen and figure out what direction this pair is actually going to or moving to, right? So everybody, what is this? Is it an uptrend? Is it a downtrend? Is the price moving up or is it moving down? Volatility, right? Of course it's going up. So we all know that as long as the price is moving up, we look for long trades, ideally. So this could be also sometimes a little bit tricky, because this, if you look at this chart and you zoom a little bit out, you'll see that this is going up for a while on this 4-hourly chart. So it's really going up. And what is the first question you would ask yourself if you see something that's already going up for a long time? Anybody? Exactly right. Question will be like, how long will it go up? Will it maybe retrace? Will it do something else? What is going to happen there? And that is again why it's so important that when you trade and follow the main trend, that you wait for the price to give you a really good sign. Let's saying, okay, what is the price usually doing? We all know if it's moving in a trend, it will retrace. It will create what we call these ABCs or 1, 2, 3s. It will breathe in, it will breathe out. So here it's breathing in for a long time without retracing anywhere. It retraced a little bit, and then it's kind of, right now it's stuck there. So we don't really know, will this continue to move up or will it go back down and try to find our 36 EMA. Remember, our settings on our classic chart is 12 EMA, 36, 200 and 633. And our 36 EMA is our trend following EMA, and our 12 EMA is our volatility EMA. So now, because we are trading Renko bars and we are trading, we're looking for day trades, which of both is important for you right now? The 12 on the 4-hourly or the 36? Any ideas? Exactly. Both are important, that's right. But because you want to day trade here, the 12 EMA, because it's the volatility EMA, the guide that is tracking, you see the price action, this is the most important for day traders right now. Okay? And the 36 would be also very important because the price likes to bounce in these areas and move back up. And this will become interesting for you if the price retraces more and hits this area. Okay, so of course we are usually interested in drawing trend lines and everything, but we won't go into that today. It's, as I said, it's too much. If we go over all the classic basics, it will take forever, right? The 36 EMA in this case, because you have a trend, is actually your trend line. And the 12 EMA is your volatility line. It's kind of a trend line closer to the price. If you can remember that for now. That's more than enough. Okay. So there we go. So when the 12 EMA is following the price like this, you know that as long as it stays above this, you can always look for setups to trade long. Correct so far? Do you all understand and agree with that? This is just basic price action stuff. It's nothing new. Okay, so that's what you want to see. If you see this happening on your 4-hourly chart, or you see the price coming back to your 12 or 36 and bouncing off it, trying to move higher, creating higher points in the charts and higher lows, as long as this is happening, every time the price comes back to your 12 EMA or to your 36 EMA, that's when it's getting really interesting for you. That's when you want to start trading also your Renko bars, because in between, if you just try to look for long somewhere in between the price is moving away from those EMAs, you're probably looking late, too late. Okay? So you remember one thing: when you check your 4-hourly chart, first thing, where is it heading to? Like, this is going up, you have an uptrend. Okay? Second, you have your two EMAs, the volatility EMA and your trend following EMA, which is actually kind of your trend line. You don't have to draw any lines. If you get this right, then you check, okay, where is the price right now? Is it, let's say, up here? So away from my 12 and my 36? Or is it really moving close to it and actually trending? Yeah. So getting back to it, touching it, going higher, retracing back, and the 12 EMA is always following, right? So as long as this is happening, this is great for you to look for setups. When you see the price coming back and touching this area, moving back to this area or this area, you have to watch closely, because two things happen. Price is bouncing on it, on this area of support, because this is your support in this case, or this, right? Or if it's not breaking or bouncing off it, it may be ranging in this area. That means it's maybe not going anywhere for a while. So that's why it's so important that you figure this out first. It needs a little bit of exercise. You won't be able to do that in a day, but when you check this live day after day, you'll see how easy it is and how much sense it makes. Everybody okay so far? I always ask before I continue, just want to make sure. Just give me a quick yes, everybody, not only 2, 3 or 5 people. Okay, great. So now let's go back to our USD CHF M6 chart. This means we go back to our Renko. And if you look at it, here's your 200 EMA, as you can see. And the 200 EMA, and that depends a little bit on volatility, is also acting as support and resistance. Okay? So if I go to my USD CHF H4 chart and I look in this area, let me zoom in for you. Let me make things bigger. What do you see down here? Here's a 12 EMA, right, in this area. Not exactly at the lowest point. Price is not stopping there just because there's an EMA. Remember, the EMAs are always late. Yeah, so the price action is what you are interested in. That is telling the truth. But when you look at the USD CHF M6 chart, in this area, you find your 200 EMA as well, which is acting as support. And it doesn't matter what candles you put on price. The 200 EMA is always a good indication, especially for price bouncing or breaking this area. Okay. Now, so far, you know that this in this area is what is happening in this area. You know that from your 4-hourly chart. What do we have in this area here, where we have the 200 EMA more or less in this area? What is there on the 4-hourly chart? What do we find in this area? Exactly, right? We find support, because the 12 EMA is our volatility EMA. It's tracking this price action there. Okay? And when the price hits this area, it could break this area, it could bounce on it, or it could start ranging a little bit. This also depends on time, because let's say you trade in between sessions, the volatility usually is not that high, especially for scalpers and day traders, right? For instance, before London Open and during London Open, especially the first and second hour is very volatile. The same in the US session and the Asian session. So especially when you like to trade day trading and scalping setups, you want to make sure you either trade all of those sessions, or the beginning of all of those sessions, or some of them. Yeah, because in between, maybe you don't have that much volatility, but that's also just a basic indication, right? It doesn't mean that after London Open, 3 hours after that we don't have volatility. Sometimes, especially in the trend, the markets can move like all day long, right? But when they're settling down, like for instance, the European session is closing, it could be that the price is moving slower. And if it's going, especially when it's finding an area of support or previous resistance or whatever, it might range a little bit more there. So you are always kind of on alert, but you don't have to put too much weight on this. Now, if you follow the technical rules and you see that you have volatility, that's more information than you actually need. Yeah, more than enough. Okay, so far, what we know is that we have a little bit support in this area because of the 4-hourly chart, and we see the price going up and down. It's still creating pips. It's still moving up and down. So we are not afraid or scared just because we found a little bit of support, but we are on alert because we know that in this area of support we might see a big bounce and a continuation of the major trend, or we see a break and a trend change, or we see the range. Yeah, this is something you have always to think about. This is the first thing you want to remember when the price is going back and finding support. You want to check if afterwards we have volatility, if the price is still creating setups, or if it's stuck in an area and just going up and down all the time, right? So are we okay so far with that? Before I continue talking about support and resistance and the combinations. Okay, great. So we haven't talked about setups yet and how to read these charts, because we first want to make sure we understand what we are doing here. It's all about understanding first, and then we get into the rules. Because if I start immediately telling you, look, this is a setup, this is a setup, and this is what you do, and so on, what happens? You will only focus on the setups, but you will not understand what to do first and how to avoid bad or many bad trades. Yeah, make sense to everybody? It's always important. First, understand what you have to do, then start trading. Okay, great. So quick recap just to make sure everybody gets it. 4-hourly chart is your filter if you want to do day trading. You don't need to go to the higher time frames when you use the Renko Bar's M6 settings. You can, but you don't have to. As I said, we also don't have enough time to do all the combinations. We do just one powerful, so you can start using and practicing on it. Okay, again, 4-hourly charts, main trend up, volatility EMA, trend following EMA. Price is over that EMA, the blue one, in this case the 12, wonderful. As long as it stays above there, great. If it's getting back to it, we watch closely for bounces, breaks, or ranges. The same when it goes down to here. We avoid trading in the middle of nowhere. We always want to see the price retracing, and you won't see the big retracements on this 4-hourly chart because this was really moving up quickly and it's very volatile, but you will see your setups on your USD CHF M6 chart. So for that, you know what this area is for now. I'll just go back now and check the rest of the chart. And if you look at this, you'll see how powerful this is when the price is moving. I don't even have to say anything, you'll see it yourself. Look at the first time when the price like really came out of a small range and started to move. What happens? It's really moving up, coming back to our 36 EMA here as well. So now what we wanna, let me just show you the whole chart, scrolling so I can see. We can stop somewhere in the middle. We don't even have to go back because we know that on the 4-hourly chart we have a powerful trend. When we trade M6 charts in a powerful trend, like in this case USD CHF 4-hourly uptrend, right? When you go back to your M6 settings, like 6 pips per candle or per box, whatever, you want to see the basic setups here. And most of you probably know it. What are our basic setups? What's the one thing we love to do when we have volatility? What is that one thing, this one setup we all enjoy if the price is moving? Exactly, right? It's just 1, 2, 3s, ABCs, because this is what the markets always do. It's breathing in, breathing out, breathing in, breathing out all the time, going up, going back down. But in an uptrend, it will always create a higher high, a higher low, a higher high, a higher low. And when that happens, especially on M6 settings, now our 36 EMA is our volatility and trend following EMA. I mean, the 12 EMA is also, of course, showing you volatility, but when we change to our M6 settings, the reason we use the 12 EMA usually is just because we want to see the crossovers, like the 12 crossing the 36, and here back you see it's crossing the 12. The 12 is crossing, sorry, the 36 from below, and then it's creating the first higher high, higher low. And this is actually why we need the 12 EMA. The most important EMA we want to use here is the 36, because we would like to see the price coming back, touching the 36 before we look for setups again. Okay, so it sometimes is touching, sometimes it's spiking a little bit, and sometimes it's almost touching. We just need to make sure we see the price coming back, trying to find this 36 EMA. Can you all see that? Price is going up. Okay. Touching the 36. Here it's spiking, going back up, going back up. So when we trade in a trend, and you know how the 36, how the 4-hourly chart looked. Let's start from here, where the chart looks a little bit funny. What we need in an uptrend, you have the confirmation from your 4-hourly chart that's going up, right? So what do we need? Just give me a second, guys, here. Okay, there we go. We need the price bouncing off this 36, moving up. And what we want to see really is that we get big, clean candles with not many spikes like this one. This is only 1 or 2, but it continues going up, creating higher points. So every candle really creating a nice, new high, of course, because these are Renko bars. So it's really obvious and visible on the chart. If that happens, then the price in a trend, the price will in a healthy trend breathe out again and do this, like always, like our classic 1, 2, 3s. Okay, when that happens, usually, as I said, if you have a powerful trend, it will stop at the 36 EMA in this area and then move up again, trying to create a new high. In this case, price did only come back to retrace to the 12. It's only 2 candles spiking a little bit, then moving a little bit higher, and then touching the 36. After that, spiking again, moving up, creating a new high. Basic stuff, but you need to watch closely. I'll explain why. Okay. Next one, higher high, higher low. Okay. Then we get another one here. As you can see, price is not creating a new high anymore. That's kind of a double top. Yeah, but it created a higher low, so it's still okay to watch. And then after that 1, 2, 3, where the price did not create a higher high, it tried and then moved lower. Then it crossed down, it crossed back up, and after ranging for a while, it did this again. Okay. Can you all see it? Everybody? Okay, great. So if you look at this 1, 2, 3, and then compare those, the next ones. Let me get rid of all the 1, 2, 3s. Just look at the candles. This is a clean, powerful move, and it's showing us that we have a lot of volatility. Here we still have volatility. In between, it's a little bit funny, and now coming back. But as long as the price stops at the 36 and doesn't cross it really, and it's bouncing on it, we still have the right to look for setups. Okay, I will explain the setups. Just give me a little bit time. Yeah, I'll do everything just step by step. Retracements back to the 36. Price does this, creates a higher point, comes back down, touching it. Here we don't have a higher point anymore. And what happens, I mean, you start seeing a little bit of a range here and a little bit here, correct? Price still moved higher. I mean, not like really much, like 50 points, but then you could see a lot of spikes and not many white candles before we get the red. Can you see that? We have like, here we have like 1, 2, 3, 4, 5, what, 15, 20 white candles. Nice retracement of 1, 2, 3, 4, 5, 6, 7, 8 candles, for instance. Okay. Now what happens? Still good here. Then the range, we have 1, 2, 3, 4, 5 candles. Yes, still okay. And then it's getting funny because we have like 2 white, a red one, then 4 whites, then 3 red ones. 4 whites not really going higher. Like yes, they go a little bit higher, but not really. And because we have our Heikin Ashi candles over it, we still get the colors and everything. But then, yes, 3 candles, then 1. You see that at that point, right? We don't have as much volatility as we had before. Can you all compare this to this? Can you all see the difference? What happened to the chart? Okay. Yes, everything is recorded, as I said before. Just have to, okay. Wonderful. So, this is, as you said, exactly steep, or let's say it's actually powerful, and we have a nice retracement. So this is, it's volatile, but really a good setup because the price also retraces nicely. It gives us a lot of red candles and retracement of about like 50% of the whole move. That's something we always like to see when the price goes up, and it's breathing in, breathing out. This breathing out part should be like 50% ideally. Okay, and then afterwards you see what happens. We have that range, and then what happens afterwards? Price is going back up, like 1, 2, 3, 4, 5 candles going down, 3 candles. Again, this is not as nice as down here, but what happened here is the price tried to move below, and when that happens, we could say, great, look, if the price moves below the 36, we are actually looking now for a setup below that, and this would actually mean that we might see a change in this, on this M6 chart, which means we would theoretically able to look for short setups, but only if the price is really far away from our support, right? Because if it's not, remember, it's an uptrend. So in an uptrend, you would really like to focus mainly on the long setups. So if you get the short setup, if it looks perfectly nice and it's far away from your 200 EMA or the EMA on the 4-hourly chart, the 12 EMA, right, or the 36, then you're okay to trade it. But if not, if you don't get a good setup, and you have support too close, then you avoid that because you still want to trade in the direction of the main trend. Write that down, please. Focus in an uptrend on longs, focus in a short trend on shorts mainly. Yeah. So we didn't get the short setup. The price actually moved above again, 36 and the 12, and it created a new 1, 2, 3 setup. And again, the 36 EMA is kind of a trend line for you. And because the price created a higher high, this is a little bit higher than the previous highs, and retraced back, this might not be a powerful 1, 2, 3 like this. But what did it tell you here? What did it say? Any ideas? Yeah. The price wants to follow the main trend again, right? And wants to go up again. And because my Renko bars created a 1, 2, 3 with a retracement to the 36, which is more than 50%, I can still trade now again, because I'll trade with the main direction. Okay? Great. So yes, we have a higher high, we have a higher low. So this is higher than the previous one down here. Okay. So one more thing. This is a live, a small live account. This I use for members that have access to is to trade on it. And I just right now saw that somebody's trading while we are doing this. So let me get rid of this position. Whoever is playing around here, just give me a second. Okay, should be better now. So, okay. Again, 1, 2, 3s, and then you see we have a little bit of volatility here. There we go. And you see here the price is not retracing to the 36 almost, and then it's going back up. It's coming back to the 36. Next thing, we don't have a higher high, we still have a higher low, which is still okay as long as the chart looks volatile, right? And again and again. Yeah. And you see, if you have a really powerful, this is a very let's say good example. Okay, it's a really good example. Not every chart looks like that every day. Yeah, it would be really great if we could have a 4-hourly chart like this, like I just showed you on UCCHF. Then you just need to switch to your M6 chart candles and do that all day long, which would, if you, I'll show you how to enter here now, which would be like free money all day long, right? So yes, you can get excited because it is powerful, but don't think that each and every chart will look like this all day long. Yeah, if it was like this, it would be really, really, really easy to trade. I hope you all understand this and agree with me. And that's why we need to filter and understand, filter out and understand when it's good to trade and when not. So I'll go back and we start now with classic entries. It doesn't really matter where you start. I will show you an easy example. Like if you do your top-down approach, in this case, of course, you check your 4-hourly chart and you know that this is an uptrend. Yeah, you know that this is an uptrend, and you start watching, let's say, somewhere here or here. If you see that you have nice setups on your M6 chart, you can start trading right away. Of course, it always works in trending markets. Yeah, you can also trade in ranging markets, but I will not be able to show you this today. I will show you how to trade Renkos in a ranging market, but not today. Remember, we have to cover too many things here. So ideally you want to trade in a ranging market because if possible you want to keep positions running and maybe turn this day trade into a swing trade, right? Like always. Let's start right here where the price moved a little bit lower, found support again on the 4-hourly chart, like your 12 EMA, and then went back up. And again, what happened here? Look, you had a 1, 2, 3, price moved back up, it stopped here. At that point, you may be not sure if this will be a range or if it will go up because you don't have a higher point on the chart yet. So if you don't feel good about your first 1, 2, 3 you get after the price is coming back up over the 36 in an uptrend, you can also wait for the next one. It doesn't matter if it's trending, it will do what it has to do, right? So when you get this, the classic setup is really, really easy. How do we do that? Anybody? I think many of you know how to do that, right? It's very easy. Price is coming back to the 36 EMA after you've done your homework and you checked your main trend and you know that you have volatility and a nice retracement. Then you look for the price it will usually spike when you use the Renko bars and the Heikin Ashi candles. You will see a spike. Let me make it bigger for you. When the price comes back down like this, it will create a spike if it wants really to bounce, and then it will move up and will change the color, of course, because now it moved 6 pips higher. You have a buy bar, a long bar, and of course this will close when the other one starts moving higher. Okay, so when you see this happening, this is actually your entry bar if you want to do it conservatively. Simply, this is an entry. Okay, and now because we add our Heikin Ashi or Heikin Ashi candles over the Renko bars, we can see how far the price actually moved before it retraced and bounced. Because if we don't have it over there, you will not see the spike, you will not see how far the price actually moved lower. Make sense? Yes? No? You will not see the spike and you won't see how far the price really moved. Okay, so that's something we need to know because we want to place our stop at the correct in the correct area. And this means that we place our stop always below this low. Yeah, like when we have a 1, 2, 3, and this is the highest point. You take your line and you draw it. What you don't do, you don't draw it like this. You will draw it over your bars, boxes or candles, whatever you would like to call those things. Okay, that's what you do, because that's when you see the break, the bounce and the break clearly. This is what we call the 2 to 3 line, because that's the line that moves from point 2 to point 3. Make sense? Okay, so when the price moves up and you get your new bar, you enter here, you place your stop below this. Yeah, because if you don't put it below this, price could move a little bit lower and then kick you out if you have it like, oh, I'll place it below here. Price, remember, could go down 4 pips, 5 pips. You won't see a new candle, but plus the spread, it would kick you out and then go up, and then you're not in there anymore. So it has to be below your 0.3. Even if you take it here, you have to place it below here. Okay, everybody? So just if you had one position, in this case you'll have a stop of about 25 points, stop of about 30 points, and you want to wait for retracement to the 36. Here again it's only retraced to the 12, but then you get a retracement to the 36, so you can draw it from your previous retracements. You don't need to do it all the way down to here because it retraced, but only to the 12, right? Exactly. Then you have an entry and a stop below, and you have another entry and a stop below. Okay, and you can do that all day long if the price is volatile. entry here. This is your 1, 2, 3, right? You know already. You always start your point 1 on the 1, 2, 3 is always the previous point 3. 1, 2, 3, 1, 2, 3. Okay, and again 1, 2, 3, 1, 2, 3. So as I said, it starts getting weird here, but you still get the higher points, so you can still try it. If you do it here, you see it's a good example also. You won't win every trade. Yeah, if anybody thinks you can win every trade, then trading is not for you. You will be disappointed. There will be always losing trades, but that's the great thing. Otherwise it would be really boring, right? If you would always win. And you have to add your money management rules to it, of course. Again, entries, stops, and there we go. Do we enter only on the spike? No, the spike appears because the price is reacting on the 36. What you want to see is your 2 to 3 line break and the white candle. That's actually more important than the spike. It's just that you usually get the spike, and you can use the spike to enter more aggressively. Yeah, and I will not show you today how we do that, because it will take, as I said, we have a 3-day workshop where I explain all that in much detail. But we need to do the basic stuff so you can start practicing already, make some pips. Picasso trading, yeah, there we go. So what happens here, you also have a setup that didn't work, right? So this one, you traded it, it moved up like 12 pips, it bounced again, it tried again, and then it came down. So it would hit your stop down here and you would lose a trade. Okay? You understand what I mean, everybody? So then you get another setup. You can start all over again and continue after doing after checking your 4-hourly and trends and everything. Check the retracements. Here it didn't retrace exactly, like sometimes only 1 pip. If it's only 1 pip, you can still take it. But if it doesn't look like a nice 1, 2, 3 and you don't want to take it, then you don't. Wait for the next one. And the next one, and the next one, and I don't need to draw them all, right? You see, it's like really nice if you have volatility. Now we have some questions in between. Why not trading on crossovers? Why not this and that? Because this is just the system. This is how we do it. Okay. Of course, if you find another way to do it and do your research and practice, of course, why not? Yeah, well done and great. But make sure whatever you do, you don't do it only a day or two and make a rule out of it. Because what we do here is something that we are doing for many years. I personally almost 15 years. And we just know that that works, and everything else, like just a crossover, wouldn't mean much, because in a range you get a lot of crossovers and it would kick you out all day long. Yeah, so you have always be smart, understand what the markets are doing, and then start trading. Yeah, it's not me. I don't mean it in a bad way. I'm just telling you that too simple without understanding what's going on is also not that great. But this is simple enough to understand and to take action. Okay. Again, ask me questions afterwards. I want to continue first. Are we all okay so far? Just let me know if you all understand what I just said about entries and stops so far. I will explain about the management. I will also tell you what else to do. All good? And this is something you can use right away, right? This is one basic strategy you can start trading today. And we have much more to share for sure That is very, very powerful. Okay, great. Let us start from down here. Our previous setup. It might take a little bit longer. I hope you don't mind, because I want to make sure you all get it. Perfect. So when you get your first 1, 2, 3, and you have your stop in place, and you know it's an uptrend, and the trend looks powerful, and you don't have any resistance close by in this uptrend, would it be smart to stay in for long, or would it be smart to just take a few pips and close the whole thing? Of course, right? Staying in for long as possible is what will grow a trading account over the long run, and it is very, very powerful, right? Especially in a trend. So what you do with your position, usually stay in forever. There we go. Yeah, stay in forever. If the trend is powerful, we try to stay in as long as possible. Now, as I said, this is a day trading strategy, and in this case, because we have those settings here, and this is the basic Spartan 1, 2, 3 system, right? So we still want to try keeping positions for longer, at least part of the positions. And what we do, and this is our policy, is we split a position into more than just one part. Yeah. What about the sound? The sound is not good? Sound is okay? Okay, great. So yeah. So what you want to do when you do Renko bars, I don't want you to go really into all details like we usually do. We have time for that, but you could try to split your position into two parts. Two parts, not 3 or 4 or 5. Two parts. Let's say, okay, I'll take this long position. I want to make sure, I'll take some profits out, so I feel much better as a psychological thing, right? And I create what we call a win-win scenario. That means we want to make sure that this particular trade, where we take incremental profits, that this trade cannot lose anymore. This will create confidence, and you have more strength to stay in the trade for longer. Okay? So what you do, you split your position into two parts by opening two different positions. You have the same stop on both positions, but you have different targets. And those two positions is actually one, just split into two parts, right? So when you open your two positions, you count it as one. With other words, when we trade, especially day trading, in an uptrend or in the middle of nowhere, what do you risk? What do we risk? What is our risk in percentage? The pips don't matter. You always calculate the percentage, right? Maximum is 1%. Okay, no 4%. Yeah, 15%. It's crazy. Guys, really, don't do that. Okay, I'm just trying to help you. When you start out with a trading account, yeah, you start out. What you want to do is growing your account first. Like, I know some of us, I did the same thing, our cowboys when we start, right? Okay, I have a $2,000 account. Let's risk $1,000 on this trade. So when I win, I make like another 1,000 or 2,000. But what about if you lose this trade? Then you are in a bad shape and you want to make it back, and you start doing a million mistakes. So the policy is, especially when you're new, you don't risk more than 0.5%. And this is already a lot, because the first thing you want is Gain experience growing the account, not gaining the experience by killing the account. Okay? So your trading account needs to grow a little bit so you make money from the markets first. Like when you invest, basic stuff, but you need to remember this you have probably to write down. When you open a trading account, let's say $1,000 or $2,000 or $10,000 depending, you know, what do you have? Money management is the most important part. When you have $1,000 account and you trade and you feel comfortable and confident and you understand it, and yes, you want to go and you practice on a demo for a while and you're really good at it, you want to grow the account. Why? Because you first want to make money from the markets. Doesn't matter if you do it on Forex, on stocks, on indices, on metals, it doesn't matter. When you invest $1,000 to trade with, this is your money. This is the money you took out of your pockets to invest. If you lose part of this money, it creates a lot of doubts and you don't have much confidence and you will start doing mistakes. You feel bad. You start blaming everybody. Okay? This does not help and nobody cares. As I usually say, and that's how it is. Nobody cares if you lose money. That's just the fact. But if you say, look, I know that I have a really good chance to win a lot of trades because I understand what I'm doing. Yeah, but I also know that some of those I will lose. You have to apply money management, 0.5% of the account, or even less, 0.2, 0.3% in the beginning, to slowly grow your account by 1, 2, 3, 4, 5%, 10%. If that happens, okay, if that happens, you know that you made like 10% already from the markets. So this money you earned by following your trading rules, your money management rules, your trading plan. Okay, so when you make 10% from the markets, this is money that you didn't, let's say, yes, you worked for, but it's not the money you took out of your pockets to invest. That's money from the markets. You earn it from somebody else in there, right? So that gives you confidence. And if you start growing it to 20% or 30%, then you can, of course, start risking a little bit more. First of all, because you know you're really good at it. You know that you already made a nice percentage from the markets. Now you risk a little bit more. So if you lose a little bit, you lose money that you made from the markets, not the money that you took out of your pockets. It's a whole different feeling. Do you all understand that? Okay, so this is something you want to write down right now. This is rule number 1. Not the entry, not the exits, not the stops, not the setups. This is rule number 1. There will always be losing trades. This is part of the game. It's not a problem. It's like I always say, paying a tip to the markets, you know, for letting you trade. Yeah, you cannot always only make money, you have also to spend it. And spend a little bit, giving it back to the markets is healthy. But if you start risking 15%, like somebody just said before, don't worry, I'm not blaming you. It's like, if you don't know, it's okay, you know. But just think about it. If you lose 2 trades with 15% is 30%. It doesn't matter if it's a mistake. Mistakes are good, right? You make a mistake, you learn from the mistake. Great, you don't do it again, because there are so many mistakes you can do. You don't want to make the same again and again and again, right? So okay, if you lose 2 times or 3 times, half of your account is gone, and now you have to really, you get into this mode to where it says like, I need my money back. I want to make my money back. If you in the money back mode, it's really a disaster. You don't want to be there, right? Revenge trading mode. Yeah, there we go. That's a good one. No, not good. So again, you split the position, you risk, let's say 0.3%, maybe 0.5%, especially right now when you start on a demo account, right? And what you do, if you have a stop of about 25 points, okay, you make sure that your two lots, your two positions are not more than that 0.5% or less, right? With your 25 pip stop. So if you have this, you can take out some profits in between, and you leave one position running for as long as this is really going your way. Okay, so how do you do that? I'll give you an example from down here. If you have a stop of 25 pips, to create a win-win scenario, you can say, okay, what I'll do, if I have a stop of 25, I also target about 25 pips plus your spread, maybe 27 pips or something like that, for my first lot. Then half of the position is out, okay, and even if it goes down and hits your stop for some reason, you won't lose anything. Make sense? Now, what you don't do is start moving your stop too early to break even. Because again, what that creates is this urgency of feeling safe. This is also a bad thing when you trade. You don't want to be too safe too quick, because this is not a safe business you're trading here. Yeah, you are not playing Pac-Man. Or what else? Pac-Man is a very old game. Probably most people don't know it. I'm getting old, I guess. But you know what I mean, right? So when the price moves up and it's creating your next 1, 2, 3 with your retracement back to the 36, bounces on it and starts moving higher, then you can take your stop and trail it, because now it's really telling you here that the price it bounced, yes, but it's also telling you that the trend is still strong and it wants to continue moving up and moving higher. And because of that, you can of course start trailing your stop, but you have still one position running, which at that point up here, or when it's creating the high, it's 150 pips in profit with a stop of 25. Okay, now in case it really breaks down and gets, you know, down to here, you still make your 50 pips. Hey guys, can you hear me again? Okay, I was talking actually to myself for about 2 minutes, I guess. When I figured out that I was offline. Yeah, it's funny. So where was I actually? I don't even remember when I lost you. I think I said something about the trailing stop, right? That's where I lost you. Okay, that's funny. Yeah. So again, like if you if the price moving up here to this point, and because the price bounced in the 36 and starting to create more white candles, you trail it, right? So if at that point from your entry you risk your 25 pips, you have already 150. This is much more than you already risk. So the percentage in profits also going up very quickly. So here, what happens if, let's say, the price decides to crash overnight when you're sleeping? You still get your 90 pips. Okay. Now, next time the price bounces and creates new white candles and moves up, and let's say you wake up the next morning, or it happens, I don't know, or you watch later on, you start trailing again. Yeah, price is bouncing, you start trailing it. you start trailing it. And at some point here, bouncing, and you start trailing, if the price goes down here at that point, it will kick you out. Yeah, so it will hit your stop. I have to zoom in. So at that point, you would make like 170 points, risking 25 with your remaining lot. Okay, so there are other ways not to take that quickly, your first lot and everything, but this is for today, this is the basic way to do it. Okay, 7-1, yeah, more than that, depending on what you did, right? Yeah, like USD CHF and the euro and some other pairs did give us like huge profits, fortunately, so we are very thankful for that. Also here again is another setup and another setup. So it's the same story. You have your entry, you have your stop, you have the main trend, and you just try to create a win-win scenario, keep the remaining position, and at that point, let's say you have another entry somewhere here, you start trailing your stop, just trail it, you trail it. So what's funny about these things, right? Look, sometimes if you trail your position before the price creates a higher high, then in a spike like this you get also kicked out, right? Could be, depending how close you have it. Like, you shouldn't have it too close. Now, like always, include those 6 pips plus spread below, like in this case 6 pips plus your spread, so it doesn't kick you out too quick. Yeah, below your 36, because remember, you would only get a new candle after after 6 pips, right? And if it doesn't kick you out here, it will surely kick you out somewhere here. It's a good question. Yes, if the trend is powerful, you created a win-win scenario, you see it's powerful, you can always, of course, add to your winning positions. But what I would do, especially when you're already in for a couple of hours and you see it's going up and up and up and up, you never know, price could break your 36, go down, find the next support area, and then bounce again. So what you want to do is, every time you re-enter, you lower your risk. Okay, you're not risking 0.5% here and 0.5% there and 0.5% here and here and here and here and here. So what you do, like let's say you're good at this, you have a nice setup, you're risking 0.5% here, you have still one position running. So what you do, you just add another one instead of 2, so you add like 0.25%. You understand what I mean? And then this one makes profits again. Next time, again only 1, because now you still have this big one running, and again 0.25%. If it's getting higher, it's moving higher up, you might want to risk even less than that. Yeah, so you're not adding, you add positions but not more risk, less risk. Common sense. Why? Because the price could retrace more. You might even get a short setup you want to take and start taking some shorts, get rid of the longs, and maybe targeting the 200 EMA, so targeting actually the support areas on your 4-hourly chart. Okay, don't worry about it. As I said, it's recorded, and there are so many ways, great and easy ways you can manage and add to your positions, but we have to do that in our live workshop in about 2 weeks. Okay, I'll give you details soon. This is how we do that, and I also explained to you already what happens when the price is reaching a support area. It could start to range. So even here you'll see you still have 1, 2, 3s you can trade, and even in this range still make some profits. Okay, here when it's going back up, 1, 2, 3s, and here it's going back down, going back up in the end. So when the price starts to range, I will show you soon, you start to, like, watch really carefully. The thing is, we are already here like almost 2 hours, so I have to be quick, because it's also getting a little bit like, I wouldn't say boring, but it's a lot of information you have to digest. So we might even have to leave something out here. Is everybody still okay? Can you handle another 15 minutes? Okay. Okay, great. So I'll have an example here for you. I have to probably... So here you have something very interesting. What is that? These are still Renko bars, but you see they're not looking that nice anymore. Price, you get your crossover, price going up, you get a classic 1, 2, 3, right? Price is going up, still a higher point. Yes, still make some profits there. And at some point it kicks you out, and then you have probably a break even with your, let's say, second lot, and make just something with your first, and then it's over. Why? Because the price does not create higher highs anymore. Let me get rid of those lines. We can draw them together again anyway. Yeah. So you get your 1, 2, 3s here, and it looks very powerful. Now at that point you also want to check your 4-hourly chart, because you will figure out that the price is squeezed between support and resistance usually when that happens. Okay, we don't do it right now because, as I said, we want to do more things today, but you get the point. I explained at the beginning. So here we go, 1, 2, 3s, 1, 2, 3s. Now what's going on? No higher highs, no higher points anymore. We get some spiky charts going up. We see the price moving lower, moving up, and then this happens. So do we have a trend when we see that we don't get higher highs anymore? That price is losing steam. That's not good. So even for Renko bars, it's not good. It's not good to trade anyway. Doesn't matter what you use. Yeah, and that's why often people don't get right. They think just because we add Renko bars, everything has to work. So when you identify this, exactly, Rupert, right? You try another pair, you try a different chart. So when you see this happens here, you say, oh no, it's not for me. First of all, you have the 200 EMA, which is the 12 EMA, or maybe even the 36 on your 4-hourly chart at that point. That means you have support. So price is too close to support to look for short setups, and there are no room for long setups. There's no room for long setups because we don't get any higher highs anymore. So you figure that out at this point for sure. Okay, look at the 36. It's kind of a trend line. It's the same thing. And then this happened. You get also crossovers all the time at the same level, crossing over here, crossing over there, crossing over there, crossing over there. Yeah, price reached the support, but was it worth trading at with a stop of 25 pips trying to make 15? No, not good. So again, what you start doing here is actually drawing lines, trend lines. Okay, again, we go into detail in our workshop, but I just basically show you right now. Here it's not even creating higher points anymore. Here it's stuck at the 200, so it's ranging like crazy. You don't want to trade in a situation like this. You can trade a range, but not a small range like this of 20 to 30 pips. It's too risky. Not on this, not with those settings. This is for scalping, which we will cover in much detail again, as I said, in about 2 weeks, but not on this setting, and not when the chart looks like this. This is where people start getting frustrated and they don't know what's going on. Yeah. Now price is going back down. It's not giving any setups. It's going back up. You say, oh look, so many pips and I don't get any setups. Okay, you don't get any setups, but you don't know at that point that this will go up. Yeah, so don't be ever, you know, like don't whine because of something like that, because you didn't really miss anything because you didn't get a setup. Yeah, price will always move. You cannot trade everything. And then again, getting close to support, getting to down here, it's still support even if you tried. Price is still not creating a lower point, as you can see. It's kind of a double bottom. And then it's going back up. So when that happens, trend lines are playing a really powerful role here. Like when you start connecting lines and you get your 3 and more touches, okay, especially after a range like this. Look, you have a lot of touches. What you don't have are setups here or here. Okay, you maybe get one here. Okay, look at this. It looks like a steep 1, 2, 3. Didn't work out, so you know price is back into this ranging zone. You leave it, and this needs more explanation, but I want you just to get the point, the basic points, okay? And then when you start drawing your trend lines, and you have an uptrend, when you start getting your smoother 1, 2, 3s again, for instance here, yes, but you're still at that point not sure. This could also start ranging again. Yeah, you have still this lows. What you have is a trend line where you have more than 3 touches. This is breaking and it's acting a little bit of support, so you could use it. Why longs? Because this is an uptrend. You know that from your higher time frame, I mean from your time frame charts, right? So if you don't trust it, you wait for the second one where it's creating a clean higher high and higher low, and then you can play, you can do your thing again, because then the charts start to clean out up again, okay? And when they start looking funny again, like here, again, wait for the main direction. Here's this 1, 2, 3. You don't like it, wait for the higher high and higher low. And so there are little tips that will filter out noise, and you will understand what to do, and you don't get stuck in situations like these. Do you get the basics? Do you understand what I'm trying to explain with this? I'm pushing a little bit because of the time. Sorry. Okay. Wonderful. So let's continue. We did the basic spot and setup with the Renko bars in the time frame combination, right? For day trading, how to enter, how to trade the stop, where to place the stop, of course, where to take profits, and how to identify the range quickly on those Renko bars. So we still need to do something else. So this is 0.5. Let me just check so I don't forget anything. And what we didn't do is the scalping setups, okay? So I'll do it quickly because this really needs more attention, and we have to practice this live by actually trading together. That's what we're going to do, as I said, in about 2 weeks. But I'll give you the basics anyway. So what we do here, let me switch to a chart. This is a setting that I practiced lately a lot, just for the guys that like day trading. And I personally, you know, I don't like day trading much. I focus on swing trading. But because lately we're using the EAs and indicators, that makes it actually kind of easy to trade as a day trader and scalper again. But personally, I hope I won't get you know, too much into this, because I did that for so many years in past, and that I don't really want to sit in front of the PC anymore. But I know that many of you want to try it for sure, and because of the results I've seen lately, it's really great. Let me go back to this a little bit. Again, when we try to scalp, yeah, or a combination of scalping and intraday trading, and use a setting like M2, what does it mean? 2 pips per candle. Yeah, so you want to make sure you don't use a broker with a big spread, because sometimes you're really just going for maybe 10-15 pips on each trade. Yeah, unless it's like really trending, then you do what we did before, you keep a position running. Okay, so how do you do that? Of course, it's a bad time now. Markets are closing here, already closed. But if you check a little bit before today what happened, you'll see it's still March 12th. You get a lot of chances to actually trade this. And the way we do that with scalping is a little bit different. I'll give you one quick example. And for everybody, please trade this or practice this only on a demo account, because it really needs more attention. Yeah. The smaller, let's say, the time frames or the settings in terms of pips per candle, the more noise you get in the markets, and it's more difficult to actually trade. That's why you need your alerts and EAs to send you your signal, so you don't have to sit there and wait and then decide. You just wait. Okay, so I'll give you an example. First of all, when you do scalping or combination between scalping and day trading, you want to set your EMA 36, and it's something that I'm just, as I said, it's new. I just did it like since 2014 after summer practicing this, and it's really great. You want to switch the settings to 24 instead of 36. I tell you why. Okay, because it's just faster, and because the price is moving faster, you want like a smaller setting there. Okay, write it down. You can leave the other one at 12. That is not a problem at all. Yeah. And again, what you want to do is you want to figure out if you have a trend or range, if the particular pair you're trading on is really trending or not, especially when you do the scalping stuff. This is a 2 pips per bar. This is for scalping only, or combination between scalping and day trading. Not for everybody. Yeah, it's for the guys that really like scalping. And again, I would suggest you start with the other settings for sure, and we will cover even swing trading settings where we combine even bigger candles, pips per candles, of course, for swing and position trading. Okay, so M2, one setting, and you want to combine it with your 1 hourly chart now, not the 4 hourly, 1 hourly chart. Because the 1 hourly chart will show you, will tell you if we have volatility, and will also give you a trend direction. So we have a very powerful short trend on the euro US dollar forever, and you get like 1 million signals that are really great. Okay, I mean like a lot. Now that the price reached the 36, what did we say before about that? This is our area of resistance, right? Resistance and support, correct? In this case, resistance, because it's a downtrend. So when the price is reaching this, we know that we will not see immediately a break. We usually get, if it's not bouncing on it immediately and moving lower, it's starting to range. That's what happened today. And when it's ranging, your day trading settings are not that great anymore, but the scalping or combination of scalping and day trading setups could be wonderful. Yeah, and they are. So I show you how you do that. First of all, I scrolled back before it started to range. I don't know how much history I have, but I mean, you can really see how this looks, right? And how it would work just with your classic normal 1, 2, 3 trading. Can you see that, everybody? It's always the same. The thing is just that you just get more often a change in a trend than you would get on M6 settings. Because remember, you're trying to scalp here, and for scalping that's more than enough. So it doesn't really matter where I go to this. If the price is moving, you can make pips, especially when you have your alerts and the A's there, all day long. Yeah. So I have Christian, which is a guy from France, and he helped me together with some other friend in Germany, Thomas, to create those little EAs for you and me. And they're testing it, and they were testing it on the euro, the CHF, and some other Australian dollar, and some other trending pairs, right? And I think Christian came up with, just on scalping, just with using the indicators and the A's that we created here, so they don't have to sit there and just wait for the alerts, then they go back to the PC, right? And they even send emails and stuff. So what they I think on the euro US dollar short in the last couple of weeks, they made like 2,800 pips scalping. Like just everyday trading. I mean, I don't have the strength and the time, and I don't even want to sit there doing this, but it's really great, yeah. And if you check the charts, you can see with what you know already, what I just taught you today. You know how powerful that can be, right? So again, the EA you just got, the one that is showing you the price moving on MT4, of course, you got for free, no problem. Now, all the other EAs that we created, they come with a workshop. I will give you the details because they're really powerful. People, we spend a lot of time to make sure they do what we want. So I hope you understand. But don't worry about it. It won't be something expensive or so. I will show you. First of all, again, here are the 1, 2, 3s. You can do exactly the same thing by just trading the 1, 2, 3s in the with a combination of your 1 hourly chart, right? 1, 2, 3s like over. This is the basic thing that everybody wants to try. And again, here, if you see the Renko bars starting to range and you get spikes, you just wait for the price to get, when you get your crossover, to create your 1, 2, 3s and your retracements. Okay, retracements back to the 36 ideally. And if they don't go back to the 36, okay, then you don't have a trade. This is the basic thing, the basic way to trade. And again, I show you here just to make sure you don't forget. Okay, you have a 1, 2, 3. This is already when the price started to range. Okay, you have your entry, you have your stop. Now, what you want to do, the difference between this and your other settings. Remember, this is only 2 pips per candle, so you have to be very, very quick. Yeah. So if that's your highest point, and this is usually between 5 and 10 pips away, your minimum stop is always 10 pips. Don't please ever have a stop lower than 10 pips. Why? Because you know that brokers can be very funny, and if a candle goes against you by 3-4 pips plus the spread, it will kick you out. Yeah. So make sure you include, here you would have like 8 pips, right? So you have a minimum of 10 pips. If you have a stop of 2, include the 2 pips, maybe even 1 or 2 more, so you have 12 pips or 13 or 14, right? So why? Because just because of that. Even, and I will show you in the workshop in 2 weeks, even if you only have a stop of 10 pips, you still place it 15 pips away and you track it, because if it's volatile, it will go your way quickly. Then you can still take it and put it at 10 pips. Yet you just want to make sure that the broker does not kick you out too quickly. Yeah, okay, makes sense. And if it goes against you, you can still manually close it if it's really going against you, which it would not if it's really volatile. Yeah. Again, you see on those small settings, you get a trend change quickly, you get a crossover quickly, so you can trade in the other directions also very quickly. You see again 8 pips, about 10 pips, doing the same thing. Now, here, if you want to trade multiple lots, I would only do that if the price is reaching a support area, like on the 1 hourly chart. It's actually reaching your 36 and 12 EMA, and if it's then bouncing off it, and then you check your Renko Bar charts and you take an entry, then you leave one lot running, because you expect this one to move much lower, and you can start trailing it not on Renko bars but actually on your 1 hourly chart. And this again I will show you in about 2 weeks. There's so many little things that you can separate and do to maximize profits, and that's what you really want to do. Okay, again, I know it's kind of a teaser for you, but it's not really, because you can really use it right away. Just make sure you get the money management part right, okay? And you have volatile pairs. I will also tell you how to, for instance, trade retracements. Yeah, they are things that are visible on the chart to even trade against your main trends, but you have to be very quickly, and this is usually for scalpers and only day traders. Yeah. When the price is moving quickly and it's moving fast and away from your EMAs, you will get some setups here, or some, let's say, obvious candle patterns that will allow you to even make pips on the way down. Okay, so this is what we do for today. Let me now tell you what we are going to do in 2 weeks exactly. First of all, no. Do we have any questions so far with what I explained? Is everybody okay with the entries, with the exits, with the stop so far? Because you can right now use this and practice tomorrow. Basic things, the combinations. And remember, I'm recording this, so if you forgot something, I'll upload it later on, and you can just watch it, okay, and make your notes. So it will get much better in... Hey, Jeff, can you give me the dates? When are we going to do our 3 days workshop? What was that? 20... I think, Jeff, let me check myself. 24, 25, and 26. Okay. Can you also paste the link for the guys in the chat box, so everybody can take a look afterwards? There's also a video. I explain what we do exactly, and I'll give you a quick overview right now as well. So we are going to do all the combinations: day trading, swing trading, scalping, with a top-down approach using normal time frame charts. All the combinations that really work well, not only well, great, I would say. Okay. Of course, the money management part, the trading plan, because you need to plan this for sure. Okay. How to track everything in your journal, and also how to trade the Renko bars without any filters, like without even using combinations and time frames. Yeah, that's just something I like to do, but you really don't have to if you follow some really simple rules and if you can stick to those. Yeah, this we are going also to cover in much detail. And we will, because it's a 3 days event, we need 3 days so you can digest everything, right? We will also afterwards practice together. Like you will get access to the live trading room where we have our premium members, elite members, and complete trader members, and we are going to practice everything live on the Renko charts, especially the small settings, to get experience, right? We do it together for about 2 weeks after the session, and everything is also recorded there in case you miss out. What else? Hey Jeff, remind me. I've said so many things. There's so many things we're going to do. About the indicators and the A's. The good thing is you will get the indicators and the A's we have created, especially for the Renko bars. You can also use them on your classic Spartan templates and on your normal trading, let's say, using the Spartan system normally. But I created those with my friends there, just to get it really right with the Renko bars, so you don't have to sit there and wait for the setup. Yeah, there are different setups that we are looking for, not only the 1, 2, 3s, but also other things. So what will happen? We will get those alerts when the time is right, when the price, for instance, creates those 1, 2, 3s. It comes back to an area where we want to. It will send us an alert early, so we can go back to our charts and check. Is this something we want to trade because the setup is there? But is everything else right? You will know because you've learned how to do it, right? So you then just have to take action. Or is there another pattern, maybe a scalping pattern that is looking nice? So we get the alert. Then we have to check the chart. Are we okay? Great, then we trade. It's not an EA that will trade automatically, because this is really not what you want. Those things never really work for long. It's always best when you have your EAs and indicators align with what you know. Then it works great. Make sense? It's all about price action and good setup. So when it's ranging, you won't get your signals and alerts anyway, so it's great. It will filter out the stuff and you don't have to think about if that's good or bad. Yeah, it's really good stuff. And did I forget something? Jeff, remind me. I'm trying to remember. You're welcome. Look, the difference is, as I said before, always trying to make things easier for you guys, right? So, first of all, we have the EAs that will help you trade, and we didn't have this before. And we changed the strategies a little bit according also to how the price moves lately. Right? Remember, like last year, 2 years ago, when we first started, markets moved a little bit differently. Now they're moving a little bit differently. We have a behavior change, let's say, in the market. So this is good, actually. It's actually great for us, and especially for those EAs, because they are exactly doing what we want those to do, right? So we can take action immediately. We also have different combinations in settings that work much better now than they worked like 2 years ago. Yeah. So because I have seen all these results that I had, members actually, they got the mission actually to trade these things live so we could see the results. I did also trade myself, but I didn't trade so much the scalping parts on Renko bars, but I've seen so many great results that it's really there is a difference, a big difference, I would say. Yeah. And yes, you have the link. The cost is for the whole thing plus the EAs and the 2 weeks extra, 147 $147, Jeff. Yeah, $147, and you get everything, and it will be, especially for the guys that take action very, very soon, 147. Then it goes up like we usually do it to 197. Yeah, about, I think, after 3-4 days. So really, if you like Renko bars, if you like what we just said, it will be really great. I can promise you that. And if you follow through and you use your indicators and the EAs, stick to the rules, I'm sure you can make a lot of profits there. Yeah. I don't know how the Renko bars are created. It's just, remember, they just show you a candle after a setting. Like if you set it to 6 pips per candle, you will get a new candle every time the price moves 2 candles. That's all. I think it's very simple, actually. Yeah. But remember, you don't need to understand the technical parts, how things actually work in the back end. Who cares? I mean, I don't care. I mean, if you care, yes, you can do your research, but this wouldn't change anything in terms of profits. You want to be a trader, you want to be a professional trader, you want to make long-term profits, you want to make you want to have fun doing this, right? So in order to do this, you don't need to know how it works. Like it's with the cars. Like I know how to drive for what, 22, 23 years. Okay, I still don't know how the whole thing works, why the thing is actually driving, you know. It's the technical part. So it doesn't mean that you cannot trade just because you don't know how these things work. It has nothing to do with trading. Okay. Again, the workshop hours will be evening. Will be my evening, like a little bit earlier than it was today, and everything is also recorded. Like in case you miss out everything is recorded. Yeah. So I hope I'll see you all there. If you don't have other questions, or you have other questions, let me check. I don't really know, Kathy, if it works on NinjaTrader. Really don't know. I never used those. Okay, Jeff, yeah, share the link. I will also add the link to this video after uploading it. Other questions? Nothing. That's great. So I would like to get your feedback. You know, if you really liked it, let me know. Send me an email, so we know in future that what we do is good for you, right? Great. So thank you very much. Then we call it a day. As I said, I will try to upload the video right now so you can watch it afterwards or tomorrow. Okay, thank you very much. Okay, guys. Bye, and I'll see you soon. Great, thanks for the feedback. Yeah.